Everybody, welcome to the seminar we're going to have on real estate professionals, solutions for tax and accounting to maximize the tax benefits of your business ownership. And remember, you're not a real estate agent, you are the owner of a real estate business. And with that, you're entitled to a certain number of deductions, you're entitled to certain tax treatments that we're going to go over this morning, and we're going to help you understand a little bit. You know, everybody says, the big guys get all sorts of tax breaks, and why don't I get those, and why can't I get this? Well, you can. You're eligible for those. It's really simple if we follow the right programs and the right directions to get us into that. Because remember, your small business, and that's what you have, is a very big deal to you. And we're going to tell you today, in just a few minutes, exactly how we can take advantage of some of those techniques. Now, what we do generally with a small business like yours, when we get started, we incorporate and we form a corporate entity that's called a subchapter S. Now, what that does is it allows you to become instantly two people. It allows you to become the owner as well as an employee. So you, the employee, will get a W-2 with federal and state taxes and Social Security tax withheld. Now, the portion of you that is the owner will get paid a subchapter S distribution, which is like a dividend. Now, that is not subject to Social Security tax. So because you're paying both sides of Social Security, that could be 15% of whatever income we show as your sub-S profit. Now, your compensation has to be reasonable, and it has to be fair, and it has to be reflective of the work you do. But we'll make sure that happens when we talk and when we meet and we decide what your payroll is going to be. We create the entity, we got to figure out what expenses you can use against your taxable income. Now, what I like to do is divide your expenses into three categories. The first one being ordinary and necessary. Whatever you pay your agency fees, what you pay maybe in rent or things of that nature. Really easy if you have subcontract labor or employees. Those are easy deductions to remember, and most people get those properly. Now, the second one are what I call hybrid expenses. They're expenses that exist. Everybody has them, but because you and I are self-employed, we can take a deduction for some, most, or all of them. That would be things like your cell phone, maybe your home internet, your automobile expenses, and certain meals and entertainment. If you're taking clients out to dinner, if you're taking maybe coworkers out to dinner and you're discussing business and you're going over your business, then those are things you can probably take as a tax deduction. We can talk about that. Now, the third level of expenses that I like to talk about are what I call success planning expenses. And that would be expenses such as perhaps you have a family member that works in the business. So rather than hiring an outside third party, you hire your son or daughter, or even in some cases parents, to cover your maintaining your listings, sending out your mailers, doing your emails, and doing whatever communications follow-up need to be done. Now, anybody you pay there, you have to pay a reasonable amount of salary to, and we have to justify that the work was actually done. But in that case, we're shifting maybe some income from you at a higher tax bracket down to your children who might be at a zero tax bracket. So it could be a very powerful tool for you, assuming you can talk your kids into doing the work. Now, another one we like to use, very common, is we can put in a retirement plan. If you're the only full-time employee, you'd be the only one that would be eligible for contributions into the retirement plan. So what we can do is set up a plan, a SEP, a self-employed pension, or a 401k, and do something like that as a way of tucking away income for you. And that could also be a very, very powerful tool for you guys to use in your business. Now, another category that we can think about is, of course, your officer's health insurance. That is not directly deductible through an S corporation, but there's a way to back into that on your individual return. And we can show you how to do that. It's not a very difficult thing to do. One of the other things, and especially because you're in the real estate business, you have an advantage. You're always out there looking for properties to buy. You're looking for things you need in terms of investment. So if you, for example, have a vacation plan somewhere out of town, if you're looking at property, you're collecting business cards, and you're helping your client investors buy property, you can be out of town, out of state, whatever. It has to be a fair and reasonable trip. Can't go to Hawaii for a month and look at one piece of property and claim that was a business trip. But if there's a business aspect to that trip, you may be able to deduct a portion of that trip. And I think that's really, really powerful in terms of how we can take your personal expenses and put it on the company return. Again, has to be business related. You have to be actively conducting business while you're on that trip. We have a lot of tax credits that are available to us as real estate investors. We have certain amount of rehabilitation credits, maybe some ERC credits. If you have employees, there might be some employee tax credits that are available to you, and then possibly some for certain qualified historical structures. The benefits of those are a little bit, can be a little difficult, because once you get a building certified as a historical structure, it's really difficult to do repairs or improvements, because you have to keep it the way it was when it became a historical structure. Now, there are also things called, installment sale income, and that's when you sell a piece of property and they pay for it over years, and you owner finance, and then you only have to pay the tax on the portion of the property or the portion of the proceeds that you get in the year you get those proceeds. So that could spread out your tax liability over a great number of years. Now, there's also a vehicle called the Deferred Sales Trust, which sort of takes some of the benefits of a 1031 and some of the benefits of a deferred sale of a 1031 and an installment sale, and puts them together. One of the limitations that the government has on real estate investments is they limit the amount of loss that can be taken in a given year. Under most circumstances, it's like a $25,000 rental loss that you can take per year. If you are a real estate professional, you are not subject to the $25,000 passive loss and limitation. So basically, if you're smart enough to invest, you're dumb enough to take a loss in excess of $25,000, I guess. I don't really understand the logic there, but there's logic there somewhere. But I guess they assume they know you know what you're doing, and they let you go ahead and do it. So again, those are some of the things, because I know your investors are going to ask you questions like this. They're going to ask you, what's cost center, what's 1031, what's a deferred sales trust? What, and another one, what type of entity should we put our rental property in? And most of the time, setting up an LLC as either a personally owned business, which is called a disregarded entity, or some sort of partnership, is the best tool to put in a piece of rental property. Now, one of the things that's important, and what I see, is a lot of questions or a lot of situations aren't treated properly simply because the questions aren't asked of the tax preparer, the tax professional, or the accountant responsible. So you don't ask me, I don't give you a good answer. So what I try to do is I make sure that there's enough communication between you guys and me to make sure that you get the answers you need to even questions you don't even know to ask. So I guess what I think we should talk about is when you start a business, and I know some of you are seasoned professionals, and hopefully these tax tips will help. Some of you are new in the business. So I will say this. I want to be there with you. I want to be there when you have your brilliant idea. I want to be there to help you implement it. When you experience success, we're going to do some success planning, and we're going to make sure that you get the best possible tax treatment for all the things that you are doing. Once we do that, we're going to go into what I call the legacy building stage, maybe creating some generational wealth. And one of the limitations in being a real estate agent, professional, owner of a real estate business like you are, is you don't necessarily have a sellable asset. You don't have a restaurant that you can operate for X number of years and then sell that restaurant to somebody else. That's not available to you. The market value of your business isn't as significant as maybe a brick and mortar business, or even a professional business that's got a book of business that is transferable and sellable. So that's why we have to come up with these other techniques. Maybe find some investment property that you get in at a good time, and you get in and you hold and you do that. And maybe we can sell those, like I said, on the installment sale over a period of years. Maybe we can contribute some to a SEP or a 401, solo 401k or something like that, and we can go over that as we go. Now, one of the ways your business is possibly transferable, and we'll go back to your kids. Yeah, your kid's 7 years old and he's helping you stuff envelopes right now and he's making minimum wage or whatever. But 20 years from now, he might be looking for a career. He might be interested, right? So raising him to the level of partnership so that business continues on might be one of the solutions that you can have to that problem of not having a business that you can, like I said, sell over time. All business, no matter how small it looks like compared to whomever else, it's a big deal. It's a big deal to you. It's a big deal to your family. It's a big deal to your legacy. And so it becomes a big deal to me and my team. And yes, we're going to make sure that the benefits that the big guys get, tax-wise or otherwise, you're going to get if you're working with us. I want to help you complete your business. And I want to be there with you. I want my team to be there with you. So let's get together. Let's meet. Maybe there's some strategies we can do before the end of the year. Get this stuff rolling in place. And I wish you all the success that you deserve. And we'll see you soon. And thank you very much for coming in. And I look forward to seeing everybody soon. Thank you.
Thank you, Doug. Thank you.